Good morning. This is Rich Nelson with Allendale. Let's discuss these special numbers from USDA, the monthly supply-demand report. Today is June 10th of 2015. Now for corn, numbers are bullish. Our focus on these numbers should be entirely on the old crop picture. USDA, as their normal methodology, does not give an accurate real-world number for new crop on this particular report. So don't be flabbergasted or surprised by some of the numbers we'll talk about on new crop that USDA did not change. Now for the old crop picture, we knew from the June 30th grain stocks report that we had smaller supplies left over of corn than expected, smaller supplies of soybeans than expected. Therefore, USDA did lower their projection of August 30th stocks for corn and soybeans on today's report. As I said, that grain stocks report from last month on June 30th, that only gave a small moment in time June 1 stocks. These monthly reports we always talk about here on the supply-demand picture are always trying to estimate the August 30th numbers. Now for corn, USDA lowered their estimate for this year's old crop stocks down from 1.876 to 1.779, almost a 100 million bushel drop. That was even more than the trade expectation of 1.811. And Allendale had that 1.811 estimate as well. So smaller than expected stocks certainly supporting this picture. USDA went ahead and raised feed residual a little bit here, also ethanol by 25 million bushels, and also exports by 25 million bushels. Now on the new crop picture, as I said before, USDA is not trying to give a real-world number for acreage or yield on this particular report. They adjust acreage to what they talked about on June 30th. And that June 30th report was a survey from May 30th down to June 16th. So this is not a real-world number. We actually don't expect the acreage to change really too much for corn. Certainly for beans, yes, but not too much for corn. So USDA only adjusted acres to that planted acreage report. On the yield number, they left that unchanged at their exceedingly high number of 166.8. Allendale points out they normally don't change corn yield on this report. In fact, they've only made changes in 8 of the past 22 years. So they did entirely what they should have for this new crop number here, leaving only changes being acreage. As far as Allendale's personal view, we're seeing trend yield is still very reasonable, and our version of trend is 165.4. Now, as far as new crop ending stocks, USDA lowered those from 1.711 down to 1.599. And technically, yes, the new crop number was larger than the trade expectation. Trade was talking 1.540. Allendale is right there with our 1.555 number. But as I said before, our focus on this report should entirely be on old crop because that's the only accurate picture USDA is going to discuss on this report. Therefore, we call these numbers bullish for corn. Now, in terms of the numbers here, as far as worldwide, we're just going to mention the new crop picture. New crop stocks were dropped from 195 million tons down to 190 million tons. That was a little more than trade expectation of 193. In terms of numbers, interesting to see USDA did go ahead and add 2 million tons to Brazil's new crop corn estimate. That's new crop for the 2016 harvest. As far as soybeans, same story. USDA's, our focus should be on old crop because that's the only realistic number they give on this report here. USDA lowered stocks down from 330 million bushels down to 255. That was even more than the trade expectation of 287. So as far as this goes, we would call this entirely bullish compared with a trade guess. Of note, it was right next to Allendale's number of 265. In terms of how USDA made these changes, they raised crush by 15, raised exports by 10, and they raised seed by 1. There was a naturally large increase of 44 million bushels in what's called the residual category, which for soybeans is typically almost zero. Now here's the plan here. When we come to this time of year, for soybeans specifically, USDA has a tight problem here, a very tough problem here. Number one, we know that in general, crush and exports are very solid demand numbers. We know these already off the top of our head here. There's no unnaturally unknown category like there is in corn. Therefore, when USDA is faced with a smaller than expected June 1 stocks number, they have to suggest there is a quote-unquote mysterious residual category, which we actually know is not actual true usage. The real fact of the matter is USDA will have to go back and revise down their estimate of last fall's harvest. They can't do that, though, until the September 30th grain stocks report, and that won't be reflected until the October supply-demand report. So here's their problem. They can't adjust old crop production here just yet. That's not going to happen until actually, as I said, the October WASDE report. So from now in the intervening months, July, August, and September, they will have an unnaturally large residual use number that will be corrected on the October report when they adjust 2014 production lower. So for your focus, though, bottom line, old crop stocks were smaller than expected, bullish for soybeans. On the new crop picture, USDA rarely makes any serious changes as far as yield, only 5 of the past 22 years. While there are certainly very valid reasons to suggest lower yields, and Allendale is right there with them, they normally don't do it on this report. As far as acreage, the only adjustment they made there was adjusting acres to the June 30th acreage numbers, which we know were unnaturally large. Yes, that will be lowered on the August and again on the October reports, but for right now, they did entirely what they should have for new crop beans. This is normal, and this is entirely what the trade should have expected. New crop stocks lowered from 475 down to 425. I don't really think that's of any importance at all because, as I said, we're not going to see accurate numbers for new crop on this particular report. As far as world numbers on beans, there were no changes made to USDA's estimates for South American production for this spring 2016 harvest. Bottom line, as far as ending stocks, they were lowered from 91 million tons down to 92 million tons. As far as wheat goes, USDA adjusted old crop stocks, as they normally would here, to what they told us on the grain stocks report from June 30th. So the old crop marketing year for wheat ended on May 31st. Therefore, what we saw from last week's grain stocks report, that is now the official end of old crop. That was raised from 712 in June to 753, exactly what the trade is expecting. New crop picture for wheat increased stocks from 814 to 842. That was a little bit lower than the trade expectation of 861 or Allendale's 860. As far as new crop wheat production, if you have any questions about that here, give us a call here at Allendale. We'll talk about those numbers with you on the production side. Now, of separate note, USDA made some dramatic changes for new crop or from the world side of things here. There have been some talk that the USDA attaché out of China would be making some significant adjustments there. He did let on these most recent monthly update, USDA simply reflected these numbers. So old crop wheat stocks jumped from 200 million tons to 212. That's one of those China-based adjustments here. As far as the picture on wheat here for the new crop picture, they went from 202 up to about 220 million tons. That was mostly due to the changes they made to this old crop picture due to adjusting with China. So bottom line for today's reports, our focus should entirely be on old crop stocks. They were smaller than expected. Therefore, this is bullish for corn and soybeans.